Few investors have influenced the world of finance more than Warren Buffett. For decades, his investment philosophy has outperformed many professionals, turning a simple approach into one of the greatest wealth-building records in history. Yet despite his success, many people assume his methods are either outdated or too slow for today's markets. That made me wonder, what would happen if I followed Buffett's core principles as closely as possible for 60 days? Instead of chasing trends, reacting to headlines, or trying to predict short-term market movements, I focused on the habits and decision-making framework that made his strategy famous. Today we will talk about testing Warren Buffett's strategy for 60 days. Did it actually work? So before we get started, make sure to hit that like button. Also subscribe to my channel. 9. Understanding the business came before buying the stock. One of Warren Buffett's most famous ideas is that investors should never buy a business they do not understand. Many people purchase stocks simply because someone online recommended them or because the price has been increasing rapidly. But a rising stock price does not automatically mean the company is a good investment. During the experiment, every potential investment was examined more carefully. Questions were asked such as, how does this company make money? Does it have strong advantages over competitors? Does it have loyal customers? Can it continue growing in the future? Does it have responsible management and a healthy financial position? 8. Buying great companies was more important than finding cheap stocks. Many beginners misunderstand value investing and believe it simply means buying the lowest priced stocks. However, a cheap stock can become even cheaper if the business behind it is weak. Warren Buffett's approach focuses on buying great companies at reasonable prices rather than buying poor companies just because their share prices appear low. Throughout the 60 days, the focus shifted toward companies with strong brands, reliable earnings, competitive advantages, and the ability to survive economic challenges. These businesses may not always be the most exciting names in the market, but they often have characteristics that allow them to continue generating value over many years. This was a major lesson because the goal was no longer finding the cheapest stock available. The goal was finding businesses that could still be successful many years into the future. 7. Patience was much harder than expected. One of the most surprising parts of the challenge was discovering how difficult patience truly is. Everyone says they are a long-term investor when they first buy a stock, but that belief is tested the moment prices start moving. There were days when the portfolio dropped and doubts appeared. Questions like, should this stock be sold before it falls further? Or was this a mistake? Naturally came to mind. There were also days when other stocks that were never purchased increased dramatically, creating the fear of missing out. Buffett's strategy required accepting that short-term movements are unpredictable. A company's stock price can move for many reasons that have nothing to do with its actual quality. 6. The market tested emotional discipline. The stock market is not only a financial challenge, it is a psychological challenge. Fear and greed are two emotions that have caused investors to make bad decisions for generations. People often become excited and buy when prices are already very high, then panic and sell when prices fall. During these 60 days, emotional control became just as important as research. Instead of checking the portfolio every hour and reacting to every movement, the focus remained on the original investment reasons. This approach reduced unnecessary stress and prevented impulsive decisions. It revealed that successful investing often depends less on finding the perfect stock and more on controlling your own behavior. 5. Fewer investments created more focus. Many investors believe that having dozens or even hundreds of stocks automatically makes them better investors. While diversification can reduce risk, owning too many companies can make it impossible to understand what you actually own. Following Buffett's principles encouraged a more focused approach. Rather than constantly adding new positions, the priority became investing only in businesses that were truly understood and believed to have long-term potential. This did not mean taking reckless risks or putting all money into one stock. It simply meant that every investment needed a clear reason for being in the portfolio. Quality became more important than quantity. 4. The 60-day return was not the most important result. After 2 months, the portfolio had a measurable result. Some positions performed well, some remained relatively unchanged, and others experienced temporary declines. The final percentage gain or loss was interesting to observe, but it did not determine whether the experiment was successful. The biggest realization was that Warren Buffett's strategy was never designed to be judged over 60 days. His entire philosophy is built around years and decades of ownership. Expecting a long-term strategy to produce immediate results is similar to planting a tree and expecting it to become fully grown within a few weeks. The true success of the experiment was developing better habits, improving research skills, and learning to think like a business owner rather than a person simply trading stock prices. 3. Avoiding bad decisions improve the portfolio. Many people believe great investors make money because they always choose the perfect investments. In reality, a large part of successful investing comes from avoiding major mistakes. Warren Buffett has often emphasized protecting capital and staying away from investments that are not understood. During this challenge, several popular stocks and trending opportunities were intentionally avoided because they did not fit the strategy. Some of them increased in price afterward, creating temporary regret, while others fell significantly. This highlighted an important truth. A good investment process does not guarantee that every decision will produce the best short-term result. It increases the chances of making better decisions over a long period. 2. The biggest change was thinking like an owner. Perhaps the most powerful lesson from the entire 60-day journey was learning to view stocks differently. Before the challenge, it was easy to see a stock as a number, moving up and down on a screen. After applying Buffett's principles, each stock represented ownership in an actual company with employees, customers, products, competitors, and future plans. This mindset changed everything. Temporary price declines became less frightening because the focus was placed on whether the business itself was still strong. Instead of asking, "What will this stock do tomorrow?" the question became, "Will this company be stronger 5 or 10 years from now?" This shift in thinking removed much of the emotional pressure that causes many investors to make poor decisions. 1. The real secret was time, not a magic formula. After 60 days of following Warren Buffett's strategy, the most important discovery was that there was no secret trick, no special indicator, and no guaranteed method for instant profits. The true advantage of Buffett's approach is patience. It is the ability to make thoughtful decisions, ignore market distractions, and allow quality businesses enough time to grow. The modern world encourages people to expect immediate results. Social media rewards quick success stories and dramatic gains. But the greatest fortunes in investing have usually been built over long periods through discipline and consistency. The experiment proved that Buffett's strategy can change the way someone approaches investing, but its full potential cannot be measured in just 60 days. The real results appear over years of staying committed to the principles. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.